What's going on, guys? Welcome back to the channel. Today's video, I'm going to be going over the trades that I took last week or this week on SPY and futures. So I didn't take many trades this week, but we were able to come out with some good trades. So I took a trade on Monday and on Tuesday, and that was that for the week. So we're going to go over those, why we took them, and yeah, we went 2 for 2 on the week, really clean trades, and this all came from mainly the fib levels. This is newer to the system. I just started trading it recently. I want to see how well this does over the next couple months, then I'll really fully give my opinion on it. So far, it's been going really well. It's a great addition to the system, and this is more so for neutral markets. When the market's neutral, this is going to give you a lot better risk reward trades, a lot better conviction trades, and that's the great thing about it. If we could make the neutral market a better time to trade, this will greatly, drastically improve how the system does. So when it comes to the neutral market, we have these fib levels here. So you obviously have these on during trend as well. They kind of just tell you when to buy the dip on these certain levels, but this is the levels that we had for the week. And again, to get these levels, it seems confusing at first, but once you understand it, it's really simple. You're taking from the last trend of the market. So to get this low down in here, obviously we were previously in a bearish trend because we kept making lower lows, and on the premium, on the 30-minute chart, we were across bearish. So what you do is you take the last swing high on that premium, which since it's the bearish trend, it'd be the last swing low before we actually cross negative and lose the trend. That's how you get the bottom level. That's how you get the low level. And that's exactly why this level down in here was made. I forget exactly where this was, or my extended hours might be on. I'm not sure, but that's exactly how you get the levels. The last swing low on the 30-minute time frame before we cross negative, and then for the bull trend, the last swing high before we go down and break the 50 and cross negative. That's how you get the top level, bottom level, and that's all you need, or the 100% mark and the 0% mark on the fibs, and then the rest of the levels just sort out because you drag the high and low, and the rest of the levels you don't have to do anything about. So what we did on Monday, very simple. I don't think I called this one out because it happened too quickly. So on Monday, you can see here we end up hitting this upper fib level up in here right off of open. I'm pretty sure this is 9:30. Yeah, right off open, we hit this level here on ES, 69.23. I took a short at this level, but I took it on NQ. I think I went over this last week, but I didn't trade ES. I took NQ on this trade, and if we pull up NQ real quick, if we pull up, let's see, it's probably on one of these other charts. It's actually not. So yeah, if we pull up NQ right here, you could see that off of that 9:30 open on Monday, what do we have? So if we pull up 9:30 on Monday, you could see the difference here. NQ was a lot weaker, and I ended up shorting this. It's easier to see on the 5-minute chart, but we pull up the 5-minute chart and go back to Monday. This opened right up in here. If I could get my chart working right. If we pull up Monday, which was this high right up in here, you can see major difference between ES and NQ. NQ was a lot weaker, so what happened was I didn't short right off open. You would have caught a lot more points if you did, but I shorted this little retracement right up in here. So I went short on this upper wick here, right around, I think 50 to 55, right in that area. I grabbed short, and look at the move we got. We got to move all the way down to 628. I just scaled along the way. Down here, I scaled for 120 some points, and that's where I pretty much got out majority. And once we started to pull back, I just exited the rest. But it's a very simple trade. All we're doing was playing that fib level off of ES. And yeah, if you took ES, you probably wouldn't have hit TPs. It just didn't move as much. But you probably would have gotten stopped out on that, or you just move your stop loss to break even, whichever you prefer when it comes to the risk. But for me, I probably still would have been holding that and would have gotten stopped out for 10 points. So yeah, that's probably what would have happened there. And then our other trade for the day, we actually took an overnight trade. So extended hours are actually off because no, they're on because I actually ended up buying this fib level overnight. So I called this outside the Discord, and I said I was setting a limit order right at 69.23.5, and you could see overnight this was 1 in the morning. We pulled back, I got filled, and that actually was the low pretty much the entire night. When I woke up in the morning, we actually ended up, we're a couple points in profit, and we actually peaked at 14 or 13 points in profit. Not too bad, but on these types of trades, you're shooting for more points because these are massive levels, and you know, a lot of the times we're going to just bounce from one fib to the next, and right off of open we end up dumping all the way down to 13.22, and my stop was at 69.12.5. So we literally just almost got stopped out on this trade. I think I had the screenshot, but it was kind of crazy on the stop loss here. Yeah, I had it at 69.12.5. Here it is right here. You can see my stop loss was all the way down in there. We just missed it like by a few ticks on ES, and yeah, we barely missed it there, and that's what I took. I mean, we bought the dip. I didn't get stopped. I put a 10-point stop, or that was actually like 11-point stop from my initial entry on that fib level. So typically like 10 12 points from that fib level is gonna be your stop. We never hit our stop, so I continued to hold this and just scaled out along the way. And your final TP when it comes to these fib trades is that next fib level. You can see what happened. We ended up ripping higher. We tapped the fib right before close, and look what happened. That ended up marking a top for a little bit. Obviously, it didn't do much because this was overnight and this was the following day. Very slow overnight action there. And obviously Wednesday the market was closed. So, or was it closed? Was market closed? Yeah, I'm pretty sure market's closed on Wednesday. That was what? Actually, no, it was open. It's Christmas Eve. It closed early, so I was not trading this, but you can see what happened. We did end up breaking above that fib level and ripping. Not something I was playing on Wednesday just because it's Christmas Eve and action's probably not favorable. So that wasn't a trade I took, but that's how you would have rode this fib to that fib. I didn't hold the full move. I ended up selling most, I think, for like around 30 points on ES in profit. And on this trade, I actually did take ES. So yeah, I called this out in the Discord. I put my limit order in right along that fib level, put my stop in, went to bed, woke up, and then we actually had this cross come into play right here. The 0DT chart actually ended up crossing, and it actually gave a really good move. And when it comes to these fib levels, and then when it comes to trading the 0DTs, it's very good, because what you can do is you buy the fib level, okay, like we bought that fib level, and then once the 0DT chart crosses, you could actually average up on your trade and add more size on, and that pretty much gives you a really high high reward trade and minimal risk, because you're already in the trade. You know, when you average up, your average fill is going to be greater than what it was when or if this chart doesn't actually end up playing out and it fails and breaks below the 50. So it gives you these chances to have some really good size on your trades for minimal risk. So that's kind of how you tie in the fib levels with the 0DT chart. And you can kind of use the fib levels again for like take profits. That upper fib level, the next fib level, that's gonna be your your final take profit on the current trade you're in. So on our longs, that next fib level would have been your ultimate TP. That's where you'd be selling your runners at and be all out. And then you just scale along the way. Like on ES, once I'm up like 25 points, that's a good opportunity or good area to start selling, and that probably equates to like over 100 points on NQ. So that's kind of the way you want to go about trading the fib levels with the 0DT chart. 0DT chart just allows you to add more size on the current trade you're in, and again, it's going to be minimal risk because your average fill is going to be greater than you know, if we fail and break below that 50 most likely. So that's how you're going to kind of go about doing that, and those are the trades we took. I mean, it's very simple. We're just playing balances off these fib levels, and again, I'll go on like greater, I guess, I mean, there's not really much more detail you can kind of tie into these. You're just changing the fib levels when we lose trend. So like right now we're currently bullish. If we go cross negative on the 30-minute, we actually change these fib levels. So the only time you change them is when the trend changes. So when we go from you know, trending to neutral, you change the fib level, and then you actually don't change the level when we actually get trend. So you're only changing it when we lose the current trend we're in, because that's kind of where you get your high and low pivots at. So that's what we did on Monday and Tuesday. I mean, that's pretty much all I got. Hopefully that makes sense. It's going to be a little bit, you know, weirder, I guess, looking at these levels on ES, but it'll just make more sense as time goes on. And right now, the levels are doing pretty well. Obviously, like for instance, this level ended up breaking, but we already hit it initially, and we did see a little bit of pullback. I mean, 6963 to what? 69.52. I mean, this is kind of, it's a little different because volatility really isn't that high right now, and especially on a day like Wednesday, Christmas Eve, there's not going to be much action happening overnight. So maybe that's kind of, you know, played into why we didn't drop that much. But yeah, I mean, if we hit 7,007, that's a good area to short. If we dip down in this, I don't know if I'm going to buy this though, 69.63. It's a little odd. when we get this level dip, I feel I'd be more comfortable breaking below 69, 63 and then reshorting it, just because of if we're crossing negative on the 30-minute, that's not really the best dip opportunity. We'll just have to see how the week goes, but that's what we did Monday, Tuesday. Drop a sub if you guys are new. Join the Discord if you guys want to learn. That's where I post these trades, and yeah, that's the place if you want to learn. I'm out. Peace.